Well, good morning, everybody. It's Larry Steinhaus, and I am the Crazy Options Trader. This is an exciting day. It's got to be an exciting day for you, too, because, hey, it's the first day that we are in the new year of the trading new year. So this is so cool because what's going to happen now is I am going to turn $100,000 into $1 million in 1 year, and you're going to watch. So this is just an awesome, awesome time. Are you excited about the new year? Come on, everybody, give me a clap. Tell me you're excited. Woo! It's awesome. The new year is here. Okay, so I want to show you real quick before the market opens. I want to prove to you that what I'm starting with is exactly what I said I was going to be starting with. So let's go and see what that looks like. So over here we've got, just real quick, we got my Ameritrade account. That is $100,000 you see in there, right now. Exactly $100,000 in the Crazy Options Trader account. You'll see, just so you're familiar, the negative 1688.30 was yesterday. I had a little bit extra money in there, and I wanted to take it out just so I wouldn't be accused of cheating. Yeah, I really it was going to make a difference. No, it really isn't going to make a difference. But I want to be fair. I also want to be fair and tell you that I am holding 2 positions in this account, and I want to show you what they were. If you remember, if you were following me a while back, I talked a little bit about Bank of America, and I thought that Bank of America was going to crash. But it seems like it's not. I may actually have to add a new rule, which is get out of a bad trade sooner than later, kind of thing. Where I'm in a trade just too long, and sometimes that creates a problem. But okay, so getting back to this, I just want to show you one more time, just to show you what this looks like. Okay, so I'm holding 2 positions. One is Bank of America, which is a put, and it's a March put. So what's basically saying is I'm looking for the Bank of America to go down before March. Now I have a 22 strike price. If you remember what that is, if you read the book, if you didn't read the free ebook, make sure you get the free ebook so you understand what I'm talking about, because this is what it's all about. This is what makes the difference. If you understand the ebook, you understand what a put is. A put is I'm looking for the market to go down, or I'm looking for the stock to go down. So basically I want to see, I have a 22 strike price put. I'd actually like to see the stock go to 20 or 19 before I get out. Just so you know. Okay, so I also have on Friday, I guess it was Friday. I think it was Friday was the last day. On Friday, I had to, let me just get this out of the way. I had to buy Facebook call because Facebook went to 115, and I really, really believe that 115 is an absolute bottom, and I didn't think I was going to see it for a little while again. So I wanted to make sure that I got in. That's why I'm in the 115 put. I'm sorry, 110. 110 call. And I want to talk about that 110 call because that 110 call is important. I want to show you why I bought this 110 call because it's really an amazing call. It's a 110 call for June 17th, and I paid $12 for it. I actually paid $12.15 for it right there, as you can see. Now, what makes this put so good is that I have so much time to use it. I have so much time to execute it. So what that means is I've got, first of all, 2 sets of earnings that I can go over. I've got the March earnings. I've got the January earnings, and I've got the March earnings. So I've got plenty time to have that stock come back. Also, if you think about it, just intrinsic value alone, again, if you haven't read the book, go to www.crazyoptionstrader.com, download the book so you totally understand what I'm talking about. The intrinsic value is first of all, I've got a 110 call, and the stock's trading at 115 right now, so I already got $5 intrinsic value. So the other thing here that's really cool is that it's $12 is what I paid for it. So for the stock to go to 122, to me, is a no-brainer. Between now and June, Facebook is going to 122. It's a no-brainer. So to me, it's an absolute, you can't lose your money option. Now, because I'm crazy, and because I'm an options trader, and because I don't want to stay in the market too long, as soon as the stock hits right around 121, 122, I'm going to get out. I'm going to take my profit of probably somewhere near 7 points difference. So I'll probably, instead of 12, I'll probably sell it for somewhere between 18 and 19 and make my money and go. And that's a nice 50 or 60% profit. There's nothing wrong with that, right? You like that every time. So that's what I'm doing. This is how I got there, and I want to see the market just opened. Let's see if there's any change, anything that needs to go on. Okay, so Facebook is already up 70 cents, only 70 cents. I was hoping for more, but that's okay. It's only up 70 cents. And look, Bank of America popped 50 cents, which means I was absolutely wrong on that put. It's a bad put. I may have to get out of it. I may have to come up with a new rule that basically says when I'm in a bad trade, get out fast. But we'll add that rule too. By the way, if you haven't already downloaded the rules, you definitely want to download the rules at crazyoptionstrader.com, because the rules are all about mistakes that I make, and they all come from mistakes that I make. So if you haven't already gone to crazyoptionstrader.com, do that. You can download the rules. This is the book. That's what it looks like. Options, big way to big returns. And here we go. Market's coming. And you and I are going to have so much fun this year. I can hardly wait. And that would be it. We're going to make that market explode. So if you want, download the rules, download the book. I will talk to you on the other side.